that driverless future?
Well, what's interesting is, I don't know about your car, but I know most cars have more and more safety features. And those safety features, especially if you go into cruise control or...
Yeah, adaptive cruise technology, adaptive braking,
my
cruise
car,
control.
essentially, if I'm on a highway, is driving itself. And when I take my hands off the wheel, it drives itself. Nope, it does. It tracks
But it tells you, but then it tells you when your hands are off the wheel.
Yeah, it's like, hey, idiot, like, put your hands on the wheel. I'm always getting yelled at by my daughter and my husband. He's like, put your hands on the wheel. I'm like, I just want to test it.
Have you ever been in a situation where you're driving, and it's raining really hard, or you're driving right into the sun, and that adaptive cruise control technology actually turns off? A warning comes on and says, we cannot do this at this time?
That has not happened.
It's happened to me twice. Once in the rain.
Did your heart skip a beat?
No, it just, they give a fair warning, and it's like, and it makes sense because it's using essentially sensors that get obfuscated by, heavy windshield wiper use or heavy rain and sun.
This is why it's the cover story this week of Business Week. We're just going to throw another story because there is one on the Bloomberg by Jackie Davalos. Uber inking a deal with Motional to offer driverless deliveries and rides. So rekindling really its vision of self-driving taxi fleet nearly 2 years after it sold its autonomous vehicle division. Hence the love it, hate it, love it, hate it. More in a moment.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Lows of the day right now for the U.S. stock market. S&P 500 index is slumping 34 points to 3748, a drop right now of 0.9%. Dow Industrials down by 331, a decline there of 1.1%. The Dow back below 30,000 at 29,940. The Nasdaq Composite Index down 66, a drop there of 0.6%. 10-year, 3.80%. We have got the 2-year yielding 4.23%. Spot gold now down $3 the ounce to $17.13, drop there of 0.2%, while West Texas Intermediate crude oil is up 0.9%, 88.55 a barrel. So again, recapping ahead of Jobs Friday, the Dow, the S&P, Nasdaq, all in the red. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, the new issue of Bloomberg Business Week is out. This week's cover story is in the magazine's features section. It's about what we're supposed to be the future, or was supposed to be the future, and instead prominent detractors are getting louder as the losses get bigger. By the way, it's also the Bloomberg Big
Did
Take.
you take a self-driving car here this morning?
No, I did not.
Have you ever taken a self-driving car anywhere?
I pretend when I take my hands off the
Yeah,
wheel.
all right, we're not going to talk about that. That's like on the record now. Max Chafkin wrote the story. He's a columnist for Bloomberg Business Week. He's with us right now in the Bloomberg Interactive Brokers studio. We also got with us the editor of the magazine, Joel Weber. He's with us in the Bloomberg Interactive Brokers studio. Joel, I joke, but the fact of the matter is here we are in 2022, and we were supposed to have self-driving cars by now. What happened?
Well, $100 billion later, that's the real question. Because there have been some really prominent companies that have gotten into this space and obviously thrown a lot of money at it. But there's not much revenue to actually show for that investment so far. And that's really the thesis that Max hits on here. And now that those losses are getting bigger, the detractors are getting louder, and it really calls into question, what this self-driving future might even look like, or if it will ever come to pass. And I think that what Max explores is that there are applications for self-driving, but it may not be exactly what we've been pitched, right, Max?
Yeah, exactly. If you go back maybe a decade ago to TED and these conferences, you had everyone basically going around, and in particular Google, kind of leading the charge, but also lots of automakers, lots of technologists, basically everybody saying, hey, my kid's 10 and, they're never going to need a driver's license. And that really became baked almost like conventional wisdom, not just among technologists, but among policymakers, consultants everywhere. And you saw basically about 5 years ago this amazing explosion of investment, not just Google and Cruise, but smaller companies, basically everyone throwing billions into this field. And a lot of that money's gone nowhere. We've seen a lot of stocks either crash in the case of Aurora, which is one of these kind of bubbly self-driving companies, or in the case of a company like Zoox, which was super hyped, and then it kind of got swallowed up by Amazon. So there's just been a lot of kind of difficulty in the industry.
Okay, so one of the sources in the story who has become something of a detractor is a name that we haven't really heard from in a while, and that's Anthony Lewandowski. Who is Anthony Lewandowski, and what did he have to tell you?
So he is, one of the most interesting people in self-driving cars. He was for a really long time, leading the charge that I was just talking about how great driverless cars are going to be. He is really the person who created to the extent that one person created the Google self-driving car or even the industry, it was him. And he went through this weird, very controversial journey. He went to Uber and then got caught up in this massive, multi-billion-dollar litigation over alleged trade secrets theft, wound up with criminal charges. He pled guilty, and then he was pardoned on the last day of the Trump presidency. And he's kind of come out the other end, obviously, with tons of baggage, very controversial, but sort of saying some things out loud that I think people in the industry were saying quietly for a very long time, and that is, this is not going as well as we wanted it to go.
What's incredible about this guy is he's the one who sort of created the first version of autonomous vehicle, right? You described this situation years ago where he took a Toyota Prius and got it to move across. Was it the Bay Bridge?
Yeah. And it's funny, it was for a reality show. So, I mean, in this kind of driverless car world, he was sort of the scrappy entrepreneur, the one who was kind of trying to push it to commercialize. He took, as you said, he created a sort of hacked together a Prius, drove it across the Bay Bridge, and then that basically got swallowed up into Google, became the Google driverless car.
But now he's doing something that is, you could argue, is sort of, I don't know, less complicated than that when it comes to the application of EVs, essentially using them on an industrial
And that's
standpoint.
right. And this actually, I think, it's the part of the article that's kind of interesting is like maybe self-driving cars do have a practical purpose.
Yeah.
But again, it doesn't look like what we've been told about, having a robo-taxi pull up outside your home or driving you to the office or you doing all that and then sending your vehicle off somewhere to like run around and make money for you all day. It actually looks like, well, maybe a mining application, Max?
Yeah. So Lewandowski's company is doing what they call autonomous haulage, basically driverless dump trucks. It sounds maybe harder than driverless cars, but you got to remember these are closed sites. These trucks are basically just going back and forth, back and forth. I mean, they very much are like, it's more like conventional robotics. And I think the one thing that kind of opened my eyes as writing this thing is there's been a lot of hype on driverless cars and the sort of robo-taxi narrative that we all thought was going to be worth trillions of dollars, caused Cathie Wood to value Tesla, at, I don't know, in the many trillions of dollars. That I think there's a lot of questions, but there's been huge advances on kind of more day-to-day autonomy. So we're talking about advanced driver assistance, ADAS, which is now like in every new car. It's dramatically changed the driving experience. It's a big part of Elon Musk's strategy with Tesla. And then we have these autonomous industrial applications, what Anthony Lewandowski is doing with mining. But of course, it's also happening in agriculture. It's happening in lots of industries that really no one's paying attention to.
Can we talk about the Derek Zoolander problem?
Yeah.
It's my favorite point. We've been talking about it in the newsroom.
So, yeah.
Playing the video.
That's what you were referring to. I was like,
Tim, I'm like, come on.
Well, yeah, anyway. He
So
can't,
tell-
yeah,
if
I
only
won't give
we
it
could-
away.
If only we could make.
So self-driving cars have lots of problems. I mean, one of the challenges for self-driving cars is there are all these parts of driving that they struggle with. One of which is what the industry calls an unprotected left turn. This is a left turn that's not, not one lane to one lane or not with a left turn signel. And it's kind of funny
Only
because
could be an ambi-turner.
like any normal driver just calls that a left, and it's just like Derek Zoolander kind of rebranding not being able to turn left as like I'm not an ambi-turner. But I think that's one of those jokes you have to be a certain age to.
Don't worry, I think 3 of the 4 of us.
I'm in.
Yeah.
No, but it's an important, right? Like
No, absolutely, and it's one of these things where. If you listen to the industry, they're saying, hey, there are these edge cases, these things nobody thinks about. And one of these things that they are talking about as an edge case is basically left turns. So like really like there's just a lot of problems that the industry has, and they're just so far away from mastery that I think this discussion we've had where people have been saying, oh, they're 99% of the way there, they just need to get that 1 more percent. I think it's very hard to say with any kind of certainty that's the ratio, that's the number.
Okay, I know for research purposes, you spend a lot of time watching YouTube videos of autonomous cars doing things they're not supposed to do. And I'm wondering, of all the ones that you got to watch, what was your favorite?
So my favorite is, it's the lead of the story. It's this happened in San Francisco last year. There's a woman, she lives on a quiet street in San Francisco, and just every day for like 50 times a day for several weeks, cars were making U-turns in her driveway, and really it only stopped because like she called the local news. Local news came, like the problem solvers came and solved her problem, and finally, Waymo tweaked their algorithm. The crazy thing about this is, if you read the story, you'll see Waymo's response to this is like, yeah, we're just following the local laws, which I think is true. There's like, in all of these cases, there are difficulties, but it's like, if you're having this kind of problem, you got to question some things.
It's an incredible read. Check it out. It's the cover story. Max Chapkin, thank you so much. And of course, our thanks to the editor of Bloomberg Business Week, Joel Weber. Check it out. The new issue of Bloomberg Business Week. It is out.
close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is Countdown to the Close, just 60 minutes left in your trading session. Caroline Hyde and Taylor Riggs, we're joined now by our colleagues, Carol Massa, Tim Stenovic. We welcome, as we do day in, day out, TV, radio, YouTube audiences to dissect what is more of a risk-off tone to the day. We're off by more than a percentage point now, it feels like, Carol.
Yeah, bouncing around here, and we're just off our lows of the session, well off our highs when we actually saw some green on the screen here. I've been looking at the home builders in particular because we're actually seeing some gains. The group overall, earlier in the session, up more than 1%, still holding on to a 0.7% gain. We had U.S. mortgage rates falling for the first time in 7 weeks, so we're talking about, well, that 30-year coming down to 6.66. The week before, 6.7. That was the highest since 2007. Home builder stocks this week, you guys, up more than 9%, and that beats the S&P, which is up about 5%, Tim.
All right, you see some overperformance. I'm seeing some underperformance, and I'm kind of bummed out that Romain isn't here this afternoon because I know he'd give me a hard time about talking about waste management companies at the top of the hour.
I think he'd probably approve.
Would he? Okay, well, I want to talk about this. I feel like there's sort of like a cash in trash, cash is trash kind of joke in here somewhere. But we got Waste Connections down more than 6.6%, Republic Services down 5.2%. We got Waste Management down 4.5%. Well, the price for old corrugated cardboard, OCC, aka recycled fiber, it has dropped so far this month, which is not good for these companies. Deutsche Bank's Kyle White wrote this in a note earlier today, and we're seeing shares down as a result.
Fascinating. Meanwhile, we look across to the broader market. I don't know where to go from trash, but at the moment, S&P 500 is more than a percentage point down, so it's trash today. We're off by 38 points. The Dow is currently off by 373 points, so it's off by 1.25. NASDAQ trying to fight a little bit harder, but it was still down by 0.6%, and same for the small caps, off by 0.7%, down almost 12 points on the day, Taylor.
And really the change in the last hour has been significant. Now there's only about 90 stocks in the green on a sector level, as you can see. I think that is, yeah, for the 1 year. I mean, it's really just energy here that's leading the way. Everything else on the day really firmly in the red. We've talked a lot about this in the last few days. Real estate and utilities have been firmly to the downside given the correlation with the rates market. So that sector continuing to be under pressure. Let's talk about some of the individual movers. Compass, this was an interesting story. You're up about 14%. You had a report that Vista Equity Partners was exploring a deal to take the firm private. They, of course, for their part, are denying that. Constellation Brands, some analysts saying that there were lackluster beer depletions and a weakness in that second quarter report.
Lackluster beer?
You got to start drinking more beer.
You got to find people. You have to find people to deplete beer. That's what I was. I'm sorry that I came in late. I depleted too much beer last night.
Love that.
Doing your duty.
There's like fundamental analysis, earnings reports, and beer, and we bring it all together. McCormick as well had quarterly earnings that topped last month's preliminary results. And finally, Pinterest. Caroline, I sort of thought about you when we did this. We had a great conversation within the last few days that LinkedIn and Pinterest, when you think about the drama within social media and the ad market space, it's actually the bright spot. You continue to see that today. Goldman upgrading the social networking side, saying that they're looking at some improving user growth and engagement trends, even amidst sort of a slowing macro backdrop.
More trusted, huh? Meanwhile, interesting that we're seeing amid all of this risk-off sentiment, we've been looking at what happens with the oil market because it has managed to defy a stronger dollar on the day. We've once again seen oil push higher. Maybe that's actually speaking to the softness in the rest of the equity market. We worry once again about the inflationary pressure of this. WTI crude heading for its best week in 7 months. That caught my eye, Carol, on this chart for our radio audience. Of course, it's still down 30% from its peak, but the fact that it's clawing back over OPEC Plus is something to watch.
Yeah, you do wonder if it's caught the eye and attention, certainly of Fed officials as well, because we know that they have come out in full force saying they are on a mission to bring inflation down. We did hear from Neil Kashkari earlier today. He said we're quite a ways away from pausing in the Fed's campaign of interest rate increases. He held a talk earlier today, and here's what he had to say about keeping on track when it comes to raising rates.
We just now need to stay the course. We said we're going to do this. We need to follow through and validate the expectations that we've set in markets. Until I see some evidence that underlying inflation has solidly peaked and is hopefully headed back down, I'm not ready to declare a pause. I think we're quite a ways away from a pause.
Okay, of course, that's Neil Kashkari, Minneapolis Fed president.
Meanwhile, guess what? More breaking news on Twitter and Musk. We understand that Elon Musk has asked the courts to stay the trial in the Twitter case. He says there's no need for expedited trial in the case because he's asking for a stay in the Delaware court filing. says Musk and Twitter could reach a pact by Monday. Now, that's coming from the Dow Jones, but Musk is saying Twitter will not take yes for an answer. Ed Ludlow is here for what seems to be still a lot of disagreement between Twitter, between Elon Musk, but slowly but surely a pushing back of any sort of legal issues here.
Let's just all take a time out for a second.
No,
okay?
it's the media. We
So
can't
look,
do that.
let's get to the latest, okay? Elon Musk is asking for a stay of proceedings. We were due to head to trial on October 17th. This was expected. It was only on Monday evening that Musk sent Twitter's team a letter saying he wanted to proceed at $54.20 a share, the original offer price that they signed in April 25th. The contention of the last 24 hours appears to be this stipulation Musk put into that letter that it was contingent on the debt portion of the financing package coming through. Both teams, as we know, have been talking about it. And we've said, according to our sources, if they could get over that debt hurdle and the legal proceedings were stayed and we're not heading for trial on October 17th, then this deal could wrap up very quickly. Why? Section 2.2 of the original April 25th agreement, the closing conditions, many of them have been met. And that's where we stand at this moment in time.
All right, there's lots of things going on. We constantly see headlines, Ed, but bottom line, from a legal basis, I mean, this deal, Twitter has a much more stronger legal case to do this deal than Elon does to not.
Yeah, look, I think the risk that the market faced right now and that we face in reporting this in real time is that there is mixed reporting out there, right? There were also headlines crossing the terminal just a few minutes ago that Twitter offered Elon Musk a lower price point, an offer of the company at a lower valuation. But according to Alex Spiro, Musk's lawyer, he rejected that offer because the conditions that Twitter had put in place, and we do not yet know the full extent of those conditions, were described by Alex Spiro, Musk's lawyer, as self-serving. And for that reason, Musk turned down the opportunity to buy Twitter at a lower price point. It's a negotiation, right? It's been messy. But what we know as of this moment, as I sit here talking to you guys, is it looks like we're not heading to trial on October 17th. And there are two sides here trying to negotiate a pretty significant piece of M&A.
Yeah, and the lawyers are all keeping pretty busy on all of this. Ed Ludlow, you're also keeping busy on it and keeping track of all these headlines for us. Of course, our Bloomberg West Coast correspondent, Ed Ludlow. And you know, here we go, guys. We know that Twitter, this Musk Twitter resolution, said to be stuck on the debt contingency issue, but it also, you have Elon Musk and his team of lawyers, you know, asking for a stay and maybe looking for some delays here. I
It's
know.
a never-ending saga. And so too is the sell-off at the moment, at least. We're off by 1.1%. We are seeing Twitter down. We're seeing broader market shifts. It's really Taylor-only energy that holds us high.
Indeed. Even as yields continue to be on the move, you're now up 8, 9, 10 basis points really here across the curve. A wild day in both equity and bond markets. And that narrative doesn't change.
Yeah. There's also another headline crossing. Elon Musk filing says the deal could close on or around October 28th. So maybe mark your calendar. Right now, shares of Twitter down about 1.6%. All right, guys, that's a wrap. We'll be back in less than an hour's time. Our cross-platform coverage on radio, TV, and YouTube. We will certainly count you down to the close on this Thursday.
You're listening to Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, you are listening and watching Bloomberg Business Week.
A lot of Elon Musk news. I was going to kind of joke around like, oh, now it's over. Well, it's not.
Which is what we talked about yesterday. One of our
yeah.
segments. It's like, wait a minute, not done yet.
Okay, so let's recap a little bit because we got a couple headlines
Yep.
here. Alex Spiro said that Musk refused the lower offer because of conditions. That's Musk's lawyer saying that Twitter offered billions off of sale price. We should note that Dow Jones is also reporting that Elon Musk's deposition delayed until Monday. Musk has asked the court to stay trial in the Twitter case. And Musk says, quote, no need for expedited trial in the Twitter case. Musk Twitter could reach a pact by Monday. Dow Jones also reporting.
Yeah, so interesting. And then, of course, earlier we had the Bloomberg exclusive about the talks between Elon Musk and Twitter to reach a resolution on the deal, but that they were stuck in part over Musk's statement that the offer is now contingent on receiving $13 billion in debt financing. So again, a lot of this has come out in that filing that Elon did earlier this week with the SEC. But it is interesting. We just heard from our own Bloomberg legal team that, man, Twitter, there's no reason why this deal shouldn't get done.
Yeah, let's get to world and national news. We'll have more on this later in the afternoon. We got Nancy Lyons standing by in D.C. Hey, Nance.
Thanks, Tim. Russia is changing its messaging on Vladimir Putin's invasion of Ukraine. With its troops losing ground almost daily, the Kremlin has told some of its state media to start admitting some of the failings of the war, worried that the upbeat propaganda was fueling public doubts. Meanwhile, in Ukraine, Russia is accused of targeting civilians again, this time firing at least 7 rockets into the city of Zaporizhia, just 32 miles from Europe's largest nuclear plant. University College London professor Julie Norman says she does not expect Russia to ease up on these brutal tactics.
There will be a public record of this, that my sense is that there probably will be some kinds of attempts for litigation after the war on some of these human rights issues. But the focus for most of these international institutions, if you will, right now is on the broader conflict and trying to put Ukraine in the best position to close this in a way that's advantageous to them.
Again, Julie Norman at University College London. President Biden is pardoning everyone convicted of simple marijuana possession under federal law. And he's also urging governors to follow suit concerning state charges. Well, the sheriff of Merced County in Northern California says a baby girl and 3 other family members who were kidnapped at gunpoint earlier this week have been found dead in an orchard.
I'm just livid inside because this was completely and totally senseless. We have a whole family wiped out. And for what? We don't know yet. So we are working on that. We'll try and get those answers.
That's Sheriff Vern Warnke. Global news 24 hours a day on air and on Bloomberg Quick Take. I'm Nancy Lyons.
All right, Nance, thank you so much. We're continuing to, of course, monitor the Twitter story, the latest from Elon Musk. We mentioned Elon Musk saying in a filing that the deal could close on or around October 28th, but it looks like also the Musk lawyers saying that Twitter offered billions off the transaction price and that Musk refused the lower offer because of conditions. Right now, Twitter shares down about 1.3%. They're off their lows of the day.
Yeah, remember, $54.20 is the price. That would be a $44 billion market cap. But Carol, as you mentioned, we're about $4 shy of that when it comes to Twitter share price. In the meantime, among the most read on the Bloomberg terminal is a story about Google contractors, and they're alleging that they were fired for union ties. Union files complaints with the National Labor Relations Board, and labor groups have sought inroads when it comes to big tech companies. We're not just seeing this at big tech companies, but take Starbucks, for example, right now seeing a big unionization push across the country.
It's interesting, right? After years of union membership declining, we are seeing so much more.
I mean, really since the 1980s.
Yeah, for a long time, several decades, right? So the Alphabet Workers Union, they represent full-time employees and contractors across Google's parent company, claims that 2 workers at a Google data center in Council Bluffs, Iowa, were terminated for discussing their working conditions and because of their affiliation with the labor organization, according to documents viewed by Bloomberg.
Another worker at the site faced retaliation for having a role in the union, that's according to the complaint, which was filed on Wednesday against Google and Modus, that's an information tech firm that serves as a subcontractor for Google.
You know, we talk about so many big macro trends that are out there. So in addition to Google, Amazon.com and Apple have faced labor campaigns in recent months with mixed results. So that's in the big tech universe, but you've talked about Starbucks as well.
Claims filed with the NLRB are investigated by regional officials. If they find merit in the allegations and can't secure a settlement, they issue a complaint on behalf of the Labor Board's general counsel, which is considered an agency judge. Those judges' rulings can be appealed to the NLRB members in Washington and then to federal court. Back to Starbucks, though, because this is a big part of the unionization effort. It's interesting because Starbucks is trying to respond to these issues by making Starbucks a better place to work. Many people do argue that it is a good place to work, but they say they're not able to do that across the board.
Yeah, it's interesting, and especially in this tight labor market.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Tape. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Down day on Wall Street. We've got red on the screen right now with the Dow, the S&P, and NASDAQ all declining. The selling continues. Let's head right over to the first word breaking news desk for today's afternoon call. And here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks under pressure right now, with the Dow currently down 367 points. S&P's dropped 38. And NASDAQ is lower by 70. The U.S. 10-year yield at 3.82%. Gold is little change. Energy is climbing. And Bitcoin is also trading little changed. Among the main 11 S&P sectors, only energy was in the green. And leaders to the upside in the Dow were Chevron and Caterpillar, while 3M fell 3.7% and led to the downside. In deal news, Dow Jones reported that Musk and Twitter could reach a pact by Monday. And in other news, Kashkari said we are quite a ways away from a pause in rate hikes. Wrapping things up, Levi Strauss reports after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie.
Okay, thank you very much, Bill Maloney. And to hear live breaking news over your Bloomberg, type squawk, SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, I got to say, I was reading this story out to our makeup room, actually, this morning. It's the most read on the Bloomberg. It's also a Bloomberg exclusive. It's about the Goldman Sachs lawsuit alleging misconduct by managers at every level and the powerful names that are coming to light after years of being kept secret.
Joining us right now is Max Abelson, finance reporter for Bloomberg News. He wrote the story along with Sri Natarajan. Max, always good to have you join us. He's with us right now in the Bloomberg Interactive Brokers studio. What is this lawsuit?
All right, let's go back to like the most basic things. So this is a really big deal. This is one of the, if not the biggest, class action gender discrimination lawsuits on Wall Street. And to remind you, Carol, you and I spoke about this, honestly, like 6 years ago now.
I thought so, yeah.
A long time ago, because this has been a long time coming.
Yeah.
A woman named Christina Shan Oster sued Goldman Sachs years and years ago. She won the right for it to be a class action. And a few weeks ago, there was a new filing in the case, and it's actually, even to call it new is kind of comes with an asterisk, because this was actually an older filing from 2014 that stayed redacted for years and years. And what was inside of it, we learned a few weeks ago. And, on the one hand, it had some really egregious allegations. We're talking things like assault, people propositioning each other at work, a sex tape. And these are all allegations now from years and years ago that were internal allegations at Goldman that came, that were released first in a 2014 filing, but were redacted, and now the public learns about it. What Sridhar and I wrote about in our story that came out today is something else. What we wrote about, there was a boss's comment to a secretary. There was another executive who allegedly checked out a woman at work. What's interesting, though, and the reason we wrote this story isn't necessarily the what, it's the who, and that's because the men who allegedly did these things are really, really powerful people on Wall Street.
Which I would say speaks to, I think, a larger story about, protecting an institution or protecting people that are really important to the company's functioning. So expand on that, if you will.
The way that Sri and I talked with each other, and with our wonderful editor, David Shear, who's in New York, normally he's in Seattle, I got to hang out with him in person. The way we talked about it amongst ourselves with our editor, Caroline, is that a good way of thinking about it, and this is how I would think about it to listeners out there, it's a fight wrapped up in a fight. It's a battle over transparency inside of a fight for equality. And what I mean by that is, you can think about a class action lawsuit over discrimination. That's the big fight. That's the fight over equality. But then inside of that, Goldman Sachs and the plaintiffs have been battling for a pretty intense battle over the last few months over secrecy versus transparency. Is it fair to name these names? Is it not fair? What Goldman Sachs would say, and they said it to us in a statement, is that, look, the court rejected the attempts by plaintiffs to publicly identify these two executives. And what they would say is, we're disappointed that Bloomberg is choosing to do it. Because, let me tell you, Carol, we did name these names. The names, according to people familiar with the matter, one of them is a gentleman named Tucker York, who's a very important person currently inside Goldman. And the other one, according to one of those people, is Gary Cohn, a name you'd know because he was the president of the firm, and then he left for the White House.
Hey, Max, broaden this out for us and talk about this industry-wide here and what it highlights about the industry. A few months ago, we had a woman come on our program, Jamie Fiore-Higgins.
Yeah.
She wrote a book all about what she says happened to her at Goldman Sachs. She was a managing director there. And I know you've written about this memoir as well. But we asked her, too, about big picture stuff because it's not just specific, according to her, to one place.
No, this is, in some ways, it's really not a Goldman Sachs story. And in some ways, that's really not even a Wall Street story. It's a story about corporate America, which includes, by the way, the media and every institution that's large and big. And, I think it's fair to say as a generalization that big corporations in America have really embraced a certain form of silence when it comes to accusations, and you see it in arbitration, which is, of course, a kind of parallel system to, that means not using judicial courts, but having a sort of a corporate system of justice, and that keeps things quiet.
Meaning oftentimes employees have to sign agreements when they start working there that they can't take them to court, we resolve this in arbitration instead.
And nobody hears about it.
Carol, that's it. But it's also even bigger than that. I'm thinking of non-disclosure agreements.
Yeah.
It's a question of when either bad things happen or even they're just accusations of bad things, who gets to hear about it? And I think our story is worth reading because it's a peek into what it looks like when powerful people are accused of misconduct. And, I want to remind listeners, we're not talking about misconduct from the last week or two. These are allegations of things that happened years and years ago, in some cases a couple of decades. And the reason is it takes a really long time to fight a case like this.
And I do think about, because York, part of Goldman's top decision-making body. I mean, Gary, these were very high-level individuals.
Yep.
And it just, whether, I'm not pointing fingers, but whether a company is like, well, wait, this individual, how important they are to the firm in terms of the top and bottom line, ultimately, and then against allegations.
It's a profound debate. The question is, what happens if you're inside Goldman Sachs or you're inside the finance industry or you're inside a big American corporation and you complain about someone with power? If you have less power and you complain about someone with power who has allegedly misbehaved, what happens and who will find out about it? I think it's fair to say that writ large, over the last few decades, secrecy and quietness and confidentiality have been emphasized, and that we're now in an era when that's really being questioned in new ways.
Yeah, and I feel like over the past few years, we realize how much has been covered and kept secret, and coming to light has really helped us all become enlightened. Max Abelson, you're amazing. Check this story out. It's on the Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, everybody, you are listening and watching Bloomberg Business Week on this Thursday. I like to call it Friday's Eve. I like to call it Monthly Jobs Report Eve.
Yeah, we got a lot of economic data to come between now and when you have pizza night at home, because we got the jobs report tomorrow. And in just a couple of minutes, we got Reed Pickert joining us, because there's a great story on the Bloomberg terminal about how good or bad the Fed is when it comes to forecasting joblessness around downturns.
It's not easy.
It's not easy, and these are pretty smart folks.
Yeah. All right. First up, back to the markets and the trade. Here is Charlie Bella.
Hi, thank you very much. And here's what's going on. We've got red on the screen. The Dow, the S&P, NASDAQ, all declining. 28 minutes to go ahead of the close. But first, Elon Musk has asked a Delaware judge to pause further action in Twitter's lawsuit against him, saying the social media company will not take yes for an answer after he revived his $44 billion bid. Twitter shares, they're down now by 2.7%. Tesla shares lower as well. They're down now by 0.4%. Equity markets lower across the board. Stocks finding little encouragement to sustain any rebound on the eve of that all-important jobs report tomorrow morning, 8:30 a.m. Wall Street time. So here's where we stand. The S&P 500 index is down now by 29 points, a decline of 0.7%. The Dow back below 30,000, down 285 points, down 0.9%. The Dow at 29,986. NASDAQ is down 43, a drop there of 0.4%. 10-year 3.81%, 2-year yield 4.23%. Spot gold down $1.70 the ounce to $17.14. West Texas Intermediate crude up 1.2%, 88.82 a barrel. Kim Forrest is Chief Investment Officer at Bouquet Capital Partners, and she has got this advice for investors.
But I'm dollar cost averaging, right? I'll buy either a third or a half of a position right now for new accounts. And I think it's paying off well. And on days like the last couple of days when things are up, I just kind of sit on my hands and don't do anything and see where things shake out. So I do think we're going to be on this crazy roller coaster ride of markets. And at individual stock levels, at least, we can pick up some good deals along the way.
And again, recapping S&P down 30, a drop of 0.8%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. We've got another one of the most read stories on the Bloomberg today. It's about how the U.S. Central Bank, of course, we're talking about the U.S. Federal Reserve, has a poor record when it comes to forecasting joblessness around downturns. It isn't easy, I guess.
It's not easy, but it's not a great record. As Reed Pickert and Craig Torres write, Fed officials have failed to correctly predict how high joblessness would increase during or in the wake of almost every recession over the past 50 years. Reed Pickert is U.S. economy reporter for Bloomberg News. She's in our 99.1 studio in Washington, D.C. Follow her on Twitter at ReedP, R-E-A-D-E-P. Reed, good to have you with us this afternoon. So why is this so difficult for the Fed to do? As I said, these are some smart cookies we got there.
Yeah, it's good to be here. And, you know, it's important to think about, so when we were deciding to write this story, how it came to be is because Craig and I were looking at their forecasts, and the thing that stuck out to us was, you know, not necessarily that unemployment was going to increase to 4.4% next year. It was the fact that it was going to stay there. And recessions more generally are very difficult to predict. And part of that stems from this dynamic that you see in the unemployment rate. So usually when the unemployment rate starts going up, it keeps going up. And the Fed has it sticking there in these forecasts. And the reason for that dynamic usually, and what you've seen in past recessions, and why in the case that the Fed has undershot a lot of where the unemployment rate has ultimately gone, is you get this dynamic where there's some layoffs, and then you see your neighbor get laid off. And so you pull back on your spending. And then when you pull back on your spending, then suddenly there's less business at all of these other businesses, and they start laying off people. And that leads to more people out of work and more people pulling back on their spending. And so it becomes this, this feedback loop that's, really hard to stop once it gets going, which is why you tend to see that dynamic of it keeps going past, where, the Fed expects and where a lot of people expect during recessions.
I gotta say, Reed, this plays into something we were talking about with our Mike McKee earlier, who follows international economics and policy, of course. But I said, okay, we know how high inflation is. How quickly does it come down on the other side? And this feedback loop, like I do wonder, like you say, that once these numbers start to be negative, people see it, and the sentiment just starts to impact a broader swath, if you will, and that those numbers start to accelerate. And that's kind of what you're saying, right?
That's exactly what I'm saying on the unemployment front. It'll be interesting to see what happens on the price front because businesses tend to be a little more likely, I guess, maybe to lay someone off than they are to slash prices out of nowhere. So you tend to see a bit quicker of a response in terms of the labor component of the costs that a lot of businesses have. But the Fed has really showed and said over and over again that they're dedicated to tamping down inflation, and that will likely be a painful experience for Americans. And so a lot of that is likely to come through job losses. But that's not to say that it has to be that way. And there's still, as Fed officials will say, there's still a potential path. It's just getting nearer.
What about this whole idea, though, Reed, that it's been hard for companies to find workers, right? That is another story that we continue to say over and over again. So might they be a little less reluctant to let somebody go at this point, only because they're so afraid they're not going to be able to get that worker when they need them?
Absolutely. So economists typically think of that as something called labor hoarding. And it's exactly that. These businesses that for the last 2 years have worked so hard to not only attract workers, but retain them and have paid a lot to do so in terms of wage increases, that, if they see a potential downturn as being shallow or not very long, that they're going to hold on to those workers, especially given the fact that a lot of businesses are still operating at understaffed levels. So that is actually one of the main arguments that's put forward in terms of why you might see a cap on unemployment, why even though these Federal Reserve forecasts look a little odd, it's one of kind of the main arguments for why you could actually see unemployment move up some, but not run away as it has in past downturns.
So what do you hear from not necessarily Fed officials, Reed, but close watchers of the American economy, people who've studied this in the past, as far as actually being able to pull off, and Carol, don't get mad when I say this, a soft landing? That is the idea of,
as long as you don't use pivot, I'm okay.
Raising interest rates without causing massive unemployment, just in the last 30 seconds that we have.
Yeah, so it's actually really interesting because among a lot of the banks, you're really split. So it's a lot of folks see that a recession is kind of the only way to get prices under control in terms of the rate that the Fed is hiking. But the argument more generally for this potential soft landing, I think, really kind of came to bear earlier this week when we saw job openings, which have been at historically high levels. We saw them drop by over 1 million in a month.
Yeah.
And so the idea, theoretically, you might be able to get there if you see job openings fall enough that you start to see those wage pressures really abate. And you might be able to do it without a lot of job losses.
And we'll get some more info on that tomorrow, too, with, of course, the monthly jobs report. Reed Pickert, U.S. economy reporter for Bloomberg News and our 99.1 studio in D.C. Let's stay in our 99.1 studio and get over to world and national news. For that, we go to Nancy Lyons. Hey, Nance.
Thanks, Tim. Those convicted of simple possession of marijuana are being pardoned by President Biden. The president's action applies to everyone who's had a conviction on that charge at the federal level. Biden wants governors to take the same action at the state level. President Biden is praising IBM for taking advantage of new laws that subsidize production of computer chips and other crucial technologies. Today, he visited an IBM plant in Poughkeepsie, New York.
The president said companies that benefit from the increase in federal research and development spending would be required to make the resulting products in this country.
Listen to the leaders of IBM and across the country. They're making decisions right now about where to invest to produce these chips, and they're choosing America. The supply chain is going to start here and end here in the United States.
The president went on to Red Bank, New Jersey, and New York City to attend Democratic Party events. In Washington, Irv Chapman, Bloomberg Radio.
President Biden earlier today admitted he is disappointed OPEC Plus plans to slash oil production. Amos Hochstein, the president's special envoy for energy security, says they're now focusing on production at home.
We have had conversations with the leadership of almost every major oil producer in the United States, told them, what do you need to be incentivized to increase production?
Amos Hochstein speaking with Bloomberg. Global news 24 hours a day on air and on Bloomberg Quick Take. I'm Nancy Lyons.
All right, Nance, thank you so much. Carol Massar along with Tim Stenovic. We're live in our Bloomberg Interactive Brokers studio. We're streaming on YouTube and, of course, live on Bloomberg Radio. And this story popped up among our most read on the Bloomberg.
I've seen a lot of tweets about it too, Carol.
You have?
Oh, yeah.
What are they saying?
This is all over Twitter.
What are they saying?
Well, they've been talking about this for months on FinTwit. FinTwit is like, financial Twitter.
The anti-Jim Cramer ETF?
Yeah, because, what they
What?
They sort of use what he says as an indicator of sorts. And, he is widely followed, and a lot of people watch his show.
Yeah.
But at the same time, people like to point out calls that he gets wrong and stock movements in the opposite direction.
So,
hence an ETF that follows what he says.
Well,
and
there's
the
one like
opposite.
against Kathy Wood, right?
Exactly, from the same company.
Yeah, so an easier way to bet against finance personality Jim Cramer. It is in the works. Tuttle Capital Management, they'd previously launched an exchange-traded fund betting against Kathy Wood stock picks. Plans to debut the inverse Cramer ETF with the ticker SJIM, according to a filing with the SEC yesterday. If approved, the fund would provide investment results that are approximately the opposite of Cramer's investment recommendations. To be fair, like I've seen, I don't know, those Barron's used to sometimes do a story like on his choices and how you would have done, and a lot of times it's not so good.
And that's why people
Sorry,
say,
Jim.
wait a second, maybe they can make money betting the other way. And obviously, Tuttle Capital Management sees an opportunity there to launch an ETF with this. And I'm telling you, when this stuff happens, and we talked about the sort of the anti-Kathy Wood inverse ARC one as well. We've talked about that in the past. It gets a lot of attention.
And to be fair, our team also reached out to him, and Jim Cramer not immediately respond to a request for some comment. It's interesting. And for those who do have faith in Cramer, Tuttle is also planning a long Cramer ETF, or LGIM, to bet on investments that Cramer endorses. No fees disclosed for the two funds, but the anti-ARC.
Yeah, short ARC, right?
Yeah, expense ratio of 0.75%. Interesting read. Check it out. You can find out more on Bloomberg and also apparently on social media. This is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 13 minutes to go ahead of the closing bell. A slight bounce off the bottom for the U.S. stock market, but certainly red on the screen. Little encouragement for any kind of a rebound attempt today for the U.S. stock market. Here's where we stand. S&P 500 index lower by 31 points, a drop of 0.8%. Dow Industrials down now by 1%. The Dow lower by 295 points. NASDAQ down 52, a drop right now of 0.5%. 10-year yield 3.81%, 2-year yield 4.22%, and we have got West Texas Intermediate crude advancing 1.4%, closing in on $89 a barrel, 88.93 right now. Spot gold at $17.14 the ounce, a drop now of 0.1%. Bottom line, ahead of the jobs report, the Dow, the S&P, NASDAQ, all in the red. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. It is 3:48 on Wall Street.
The following is an editorial from Bloomberg Opinion.
This editorial was written by the Bloomberg editorial board. In the days since Vladimir Putin ordered Russia's largest mobilization since World War II, hundreds of thousands of Russians have fled the country. Some of the country's neighbors are now fretting about the consequences. But while frontline nations are understandably reluctant to absorb new waves of Russian exiles, closing the doors to them will only strengthen Putin. In contrast, allowing them in would help drain Putin's war machine, which is already struggling with mounting casualties. The plight of Russians seeking to avoid the battlefield pales in comparison to the suffering Putin has inflicted on the people of Ukraine. Yet giving more Russians a way out would erode Putin's ability to prosecute his assault. The West should make the most of it. This editorial was written by the Bloomberg editorial board. For more Bloomberg opinion, please go to Bloomberg.com/opinion or OPIN Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, just about 9.5 minutes left in today's trading session. We have been bouncing around, but we are well off our best levels of the session. In fact, hovering just off our lows of the session. So let's get to it with our Drive to the Close guest.
We got Jessica Beamer joining us. She's portfolio manager at Easterly Investment Partners. Jessica joining us this afternoon on the phone from Pennsylvania. Jessica, good to have you with us. How are you?
Hey, Tim, how are you?
We're doing pretty well, trying to figure out what earnings season is going to look like and hoping that you can shed a little light on that. Before we do get there, though, we get those jobs numbers tomorrow. Help us understand, how to make sense of the economic data we've been getting this week and Fed officials banging the drum saying we've got a ways to go when it comes to tamping down inflation.
Yeah, I think it's a great question, and I think we're still in the stages where we're collecting data and trying to see some early signs of the Fed impact. I think when we're looking at the data this week, whether it's what we've already seen or what we expect to see tomorrow, I think we all have to understand that we're only going to get early hints of the Fed's full impact. A lot of the efforts that they've put out there, obviously huge increases in the interest rate, but that takes time to work its way through the economy and certainly on the jobs numbers that we're going to see. So, we expect to see some continued improvements increases in wage. But at the same time, I'm not sure if we can really take that data and read into it in terms of what the Fed is going to do, because we know that the Fed is looking out at the long term, and they, it takes a few months for their efforts to end up in these numbers.
All right, so Jessica, we know the S&P 500 before this week's two-day rally pushed it higher. It was very oversold if you look at some of the technicals like an RSI, relative strength index. So we've bounced off that level, but now we're trending lower again. How do you think about the bottom for equities?
Yeah, I think that's really the ultimate question here. And, you know, the last few weeks, I'd say the last 5 weeks have been really interesting. You know, there's kind of three things I would point out. First, you know, investors have begun to acknowledge that the sell-off we've seen so far this year is not temporary. I think there was a narrative earlier this year that we needed a quick valuation correction and that the S&P would kind of rebalance and move on. Clearly, with the S&P down 25% through the first 3 quarters of 2022, all of that decline related to PE multiple compression, you know, investors, I think, are starting to realize that it's going to be a down year. And that perhaps is driving some tax loss selling or just some capitulation. And I think, honestly, there's an effort to really diversify portfolios. It's about time because growth is still pretty much in line with its long-term average in terms of PE, and value stocks are a lot cheaper. So I think there's still this kind of emotional reaction to having a down year. Secondly, interest rates have really been a dominant story since mid-August, and it's created some panic in equity markets around housing, M&A financing, you know, rolling debt. I think people are really worried about kind of how those rates are going to affect individual companies. So that has been an issue. I think we've seen some moderation in the last few days. I don't really want to say we're done worrying about interest rates, but that's going to be a dominant issue. And then thirdly, companies have started to preview their earnings reports for third quarter and provide guidance for the fourth quarter. I think that's going to have a pretty significant impact on what the bottom looks like for the S&P. I'm actually really excited to hear from companies because they are able to really give us, obviously, some perhaps short-term negatives, but long-term guidance on how they plan to react to the current environment. That tends to be a good thing for stocks. And I think a lot of companies that have reported so far, you know, even bad news, people are able to process that and put it into their models and then move on. So I think next week as we move into earnings, we'll start to hear more about 2023 and long-term plans. And I think that's ultimately going to help stocks in the long run.
Well, but if it doesn't help stocks, like if it only helps stocks if we hear, you know, optimistic news about what 2023 looks like.
But what if we have CEOs say, okay, it doesn't look good, but that's the worst of it?
Like, I mean, it's kind of like what Gina Martin Adams said about the Bloomberg Intelligence analysis of earnings transcripts that she saw, right? In the first quarter, they mentioned inflation more than in the second quarter.
Right.
Yeah, I would say that uncertainty is probably the worst thing for stocks.
Yeah.
And so even if it's bad news, I think people are able to at least say, okay, this is the information. Here's some concrete numbers that I can put into a model. I understand where the management team plans to go over the next 12 months, and they can understand the strategies going forward. I think it's much harder when we don't have any information and we just sit here worrying about it. So I would be, you know, if there's a management team listening, I would say please be as specific as possible about your plans for your individual company. I think any effort by management teams to put off you know, concrete guidance is going to be problematic.
Yeah, don't tell me you don't have any visibility because then I'm running for the hills.
Right.
Hey, listen, in the meantime, Jessica, are there, or what do you see as the best opportunity for investors who do have some money that they want to put to work right now? Is it cash? Is it or cash-like, or is it something?
I mean, we've heard a lot of that this week.
Yeah,
right,
we have.
A lot of people are going back into cash, and you know, I understand that. You know, is a nice, safe place to be most of the time. But you know, I would say that from our perspective, there are still places within the market that offer outsized opportunities. You know, financials are still a pretty well-positioned to benefit from rising rates. And historically, financials have been a safe haven in these types of markets where inflation is rising and people are worried about the economy. It is hard to imagine financials as a safe haven because there are a lot of components of those businesses that are very GDP sensitive. But I don't think investors truly appreciate the power of increasing rates and increasing net interest income and the amount of the operating leverage that we can see at those banks as rates go up. We had a taste of it last quarter. We'll see a lot more of it this quarter. You know, the other area we're still really bullish on is energy. It's benefiting from, you know, increased commodity prices, strong free cash flow, increased dividend payments.
It's the only major industry group in the S&P 500, there are 11, that is up this year, and it is up 50%. We understand why, but you would still find opportunity.
I think we are, and I think it comes from the fact that it's still a pretty under-owned part of the market, and I think our long-term view is that that energy is still going to be an essential part of our economy, whether it's renewable energy or oil and gas. I think these are all very important parts of our economy, and it's just simply under-owned. I know a lot of investors have been focused on healthcare, and that has been widely discussed as a safe haven. I think that trade's getting a little bit crowded, and there are plenty of places within healthcare that are still, great investments.
Right.
Jessica Beamer, portfolio manager at Easterly Investment Partners, on the phone from Pennsylvania. Let's get over to our TV team for our cross-platform coverage of Beyond the Bell. It's starting right now on Bloomberg.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And we are about 2 minutes away from the end of the trading day. Caroline Hyde, Taylor Riggs, counting you down to the closing bell. Head to help take us beyond that bell. It's a global simulcast. It is Carol Masser, it is Tim Stenovic, and it is TV, radio, and YouTube audiences that we look at a market that really couldn't get above itself. When we're looking at Anil Kashkari, we're looking at a Federal Reserve once again talking about a focus on inflation, we head south in terms of equities.
Yeah, you do get that feeling, Caroline, that people just ahead of the jobs report, you wonder, is it just going to provide more fuel to that Fed conversation that, hey, folks, we're going to continue raising rates, we've got to bring inflation down. And so maybe we're seeing that, Tim, play out a little bit in the equity trade today.
But is it any different than anything we've heard from Fed officials since Jackson Hole or even before Jackson Hole?
No.
Is it? No? Okay. It was a rhetorical question.
It's the unpivot from the other pivot.
We had a fun chat with Mike McKee earlier today, and I won't use the word exasperated, but
he's tired.
But he's like, guys,
yeah.
Which
word don't you understand?
Stop it, Mark.
Yeah.
Stop it.
Well, we heard from Nestor and Cook today saying, yes, it is unacceptably a high inflationary environment. Yes, restoring price stability requires ongoing rate hikes. Yes, the focus is bringing inflation back down to 2%.
And the bond market gets it, Taylor. The bond market gets it. The yields have been pushing higher finally, but it was interesting that we had that sudden plummet in the yields story earlier this week. That almost is what gave the reprieve to the stock market, really.
We really heard that, you guys, for our radio audience, from Jonathan Golub over at Credit Suisse, saying that the equity markets do indeed get a reprieve from at least those bond yields falling, even though it's temporary.
Today, no reprieve. If you're long the S&P, you're down by 40 points. Let's look at as the markets ring. And look at Mondelez trying to celebrate. Look, there's the giant Oreo. There's your Milka cow. And they ring the bell after 10 years, having spun out of Kraft Foods. We just had the CEO on of Mondelez, of course. But overall, we're looking at an S&P that is off by 39 points, more than a percentage point lower. We're looking at a NASDAQ that's off by 75 points, almost 0.7% lower, and a Dow that's off by more than a percentage point. Let's broaden it out. Let's look at the small caps, because the Russell 2000 also having a tough time of it, but actually your outperformer is only off by 0.6%. Carol.
Yeah, all I can think about is Oreos and some milk right now. All right.
Oreos are vegan, Carol. You can eat that.
We have.
Does that mean they're healthy?
I know we're going off the rails here, but we do have new 4-packs of Oreos here for snacks. I just got one today.
Who needs 4 when you could have 100? I can't just have 4.
Well, anyway, the S&P 500, most names in the index, we're going to dig a little bit deeper, about 415 lower today, Taylor, 88 actually higher, but you saw that negative cent building as those equity averages moved to just off their lows of the session.
You know, Carol, I'm too short for this, but if I blocked out this that says one day and covered that, you might think that this chart is year to date. Take a look at energy. It's the only sector, again, in the green. It's up another 1.8% for the day, and that really just has been the incredible story for the year as we're continuing to see sort of day 2 of those OPEC production cuts and the ramification on this energy market. I'll take you down to the bottom as well, some of the underperformers, and that too is sort of another similar theme that we've been talking about in the last few days. Food and beverage, real estate, utilities, again, as yields are rising, those are some of the sectors that are traditionally pressured. Carol, those are off about 3.5%.
I love that you said energy. We talked with Jessica Beamer over at Easterly Investment, and she said that's a play to put new money to, and she says it's going to be important in our economy for a long time, and she says it's under-owned in a lot of portfolios, so that was one of the groups that she liked. All right, to some of the gainers, specific gainers. Costco up as much as 2.8% today, still holding on to about a half a percentage gain in the trade. It was top in the NASDAQ 100. The September total comp sales from the company, they were beat up 8.5% versus an estimate of up to 6.3%. So this company, Alice pointing out, gaining market share as consumers increasingly look for value. Peloton, check it out, up 8% at its highs today, finishing the day with a 4% gain. Still only about an $8, almost $9 stock here, cutting jobs for the fourth time. The company's CEO telling staff today the move needed in an effort to save the struggling business. The cut roughly 500 globally, or 12%. And then check out cannabis stocks. What, a high, I should say, or what's a
You can
high?
do that.
Yeah, on a high, I guess I should say.
Allowed.
I know, it's really bad. Up about 31% here. This as the Biden administration to order a sweeping review of the drugs treatment by law enforcement authorities. So we really did see a boost in many of the names and the ETFs that play in that space, Tim.
Yeah, Tilray up more than 30%. Look at that.
big gain.
And some other ones up too, Carol. You got the gainers, I got the decliners. I want to start with shares of Tesla today. Underperforming the S&P 500, but bouncing around for much of the day. We did have so much Twitter news today. Worth checking out what happened with shares of Tesla, where, of course, a lot of Elon Musk's net worth is tied up. Speaking of Twitter, shares falling more than 3.6% today. Elon Musk asking a Delaware judge to pause further action when it comes to Twitter's lawsuit against him, saying the social media company will not take yes for an answer. And then we did also learn earlier in the day that talks between the two sides have been stuck after Musk said that his offer is now contingent on receiving $13 billion in debt financing. That's according to our reporting here at Bloomberg. And then Generac, shares falling down more than 5.6%, or 5.6% exactly. Bank of America downgraded the generator maker to neutral from buy. They say there's greater risk of the company issuing weaker 2023 guidance. Shares are down more than 66% since November highs of last year.
It's been a really volatile stock of late. Meanwhile, what's also been volatile is your cross-asset space, your FX space in particular. I want to talk about what's happening with King Dollar. We're back up once again in the green, up 0.7%. We're seeing a stronger US dollar because we have those comments coming from Lisa Cook. We have those comments coming from Anil Kashkari, who is saying that we are still so focused on inflation. We are not pivoting. We therefore see weakness across the board. Interestingly, you see weakness in the Norwegian krone when oil has been managing to fight off a stronger dollar. Interestingly, you see the loonie, the Canadian dollar, also weakening. That's off by 0.9%. Now, this is more to do, interestingly, it's also weakening as we see a very hawkish, well, more hawkish than anticipated, Bank of Canada once again speaking up about its determination to tackle inflation. And that sort of perhaps gave some impetus to why we think the hawkish nature from the Fed is going to stick. The pound having a very ugly day as we once again question the fiscal policy coming from that nation and indeed the overall fundamentals for the UK. We're looking at Brent crude, as I said, pushing higher. WTI up 1.5%, $89 a barrel now. 4 straight days of gains after OPEC Plus says we will be curtailing production. And sovereign bonds just a sell-off across the board. Greek yields, Belgium yields, German even pushing up some 9 basis points. And as I say, the Canadian yields, 2-year, up 12 basis points as we get that more hawkish tone coming from the Bank of Canada.
We're getting closer in the U.S., up 9 basis points on the front end here, and pretty much up about 6 to maybe 3, as you can see there, further out, longer out on that yield curve. And Carol, for me, as always, when we focus on the front end of the yield curve, it's how sticky that is when you think about all the Fed speak we have, and again, that really key labor data that we're going to get tomorrow as well, and how the Fed can or cannot move on the heels of that.
Yeah, in a market environment where we saw that significant 2-day rally earlier in this week, you do think about that if there is any signs of weakness in that monthly jobs report, if we see in terms of wages that inflationary pressure component comes down at all, it would be very easy to see some kind of rally because it feels like investors are looking for reasons to think that the Fed is going to be less hawkish despite all the Fed commentary. So what we get on that print at 8:30 is really going to set the tone tomorrow, Tim.
Yeah, and actually, again, going back to what Mike McKee told us earlier in the day, if you like the numbers that we got this morning, and he was kind of laughing about it, then you'll love the numbers that we get next Thursday morning when it comes to initial jobless claims, because half of Florida essentially wasn't able to work over the last week as a result of the hurricane that devastated many parts of the state. So you look for softness anywhere you can get it, but oftentimes it comes with some sort of asterisk.
Well, the asterisk usually being a Fed speaker who comes out and knocks it back and says, no, we're still focused on inflation. That's why the CPI print next week is going to be also important. And indeed, some of the wage data that we get within the non-farm payrolls, how strong, how sticky. We were just having Jonathan Golub over from Credit Suisse saying that there's going to be a stickiness within the inflation area because it's going to be wages, how much the Fed wants to fight that element.
Interesting. I always love the Morgan Stanley note that comes out about this time and looking at wages, that average hourly earnings rising again about 0.5% for the month. And that year-over-year rate is again about 5.1%. So Caroline, it sounds like some of these average hourly earnings and some of these wages are proving to be a bit sticky.
Interestingly, we're going to have Seth Carpenter of Morgan Stanley on a little bit later, talking more broadly the global story here. And I wonder if we'll talk a little bit about oil, about how much that's still such an inflationary pressure point. It was interesting that this wasn't just a US sell-off, Carol. This was a global market sell-off. European markets sunk as well.
Yeah, and I keep thinking about bottom for stocks, right? Top in rates, and something that we put to Jessica Beamer also about that. And she said, when we start to get earnings, it's going to be so important. What they say about the third quarter and specifically about the fourth quarter outlook will have a significant impact on stocks, whether or not they bottom or not. If there's some optimism and some good transparency in terms of what's to come, then we could see some bottoming. If there's a lot of questions and uncertainty, that could be tough on the equity play.
All right, we're going to start to hear from banks in the coming weeks, so we're going to get a good idea of the way that they're thinking about the economy. Always a good barometer for an understanding of what's happening on Main Street.
All right, less than 24 hours away from that jobs report, and that's something certainly that will dominate our conversation tomorrow. That is a wrap, guys. We will see you tomorrow. A wrap, our cross-platform coverage on radio, TV, YouTube. We call it Beyond the Bell. We will be here again, same time, same place tomorrow.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Yes, indeed. It is Bloomberg Business Week. What? What?
Here we are. I can't believe it's already jobless claims.
Yeah.
Well, also, I should not monthly jobs report. I
Happens
should say.
once a month, you know.
I know, but
what?
Yeah, I talked about this a couple days ago. November 2nd is when the next Fed meeting happens, which is less than a month away.
Just before midterms.
Just before midterms. And this is the only jobs report tomorrow that we get from before it.
Right.
And then next week is the only inflation CPI report we get.
Right. Based on the Fed conversations, unless it is a report that shows the job market falling apart, and again, we have to watch for nuances as a result of the hurricane and different things, especially in the weekly numbers, and unless inflation comes plummeting down, folks, we got the memo. The Fed is going to keep raising rates.
And they'll keep talking about it, too.
Yeah, exactly.
Let's get to world and national news. Nancy Lyons is standing by in D.C. Hey, Nance.
Thanks, Tim. President Biden is touting the recently passed CHIPS Act that aims to boost production of computer chips here in the U.S. He took his message to an IBM facility in Poughkeepsie, New York, that's making a $20 billion investment in quantum computing and semiconductor manufacturing.
We need to make these chips here in America to bring down everyday cost and create good-paying American jobs.
Biden today also announced he is pardoning everyone in jail on federal charges of simple possession of marijuana. He says no one should be in jail for just using or possessing pot. He wants governors to follow suit for those held on state possession charges. Well, more high school students are using e-cigarettes despite government attempts to crack down on vaping. That's according to a new survey published today by the National Youth Tobacco Survey. It found about 14% of high schoolers reported using e-cigarettes in the last month. That's up from 13.4% last year. Hurricane Ian is poised to be Florida's deadliest storm since 1935.
State officials in Florida have confirmed 89 deaths so far. That is slightly more than Hurricane Irma's toll in 2017. But county officials have added dozens more to the total, and the Washington Post reports that puts the unofficial tally at least 117, which would make Ian deadlier than Hurricane Andrew in 1992. President Biden has warned Ian could be the deadliest hurricane in Florida's history, but Governor Ron DeSantis has said it won't come close to the 1928 hurricane that killed a record 2,500 Floridians. In Washington, I'm Nathan Hager, Bloomberg Radio.
Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. You are listening and watching Bloomberg Business Week on this Friday's Eve, this jobs report eve, and we continue to see, some interesting stories when it comes to the tech space and what companies are up to.
It's the most wonderful time of the year.
It's the most. You have to do it like that, Tim. I'm sorry,
I-
you cannot use that line unless you sing it. Come on,
I don't
come on.
want to get sued if I don't have
Good
the rights for it,
baritone
okay?
voice.
Yeah, not going to happen. But it does mean, in the fall, we kind of see it kick
Yes.
off with Apple, with the new hardware. We saw some Amazon devices recently. Now we're getting the new Alphabet, the Google hardware that's coming out now. We got new phones. We got a new watch. And the headline here is that it undercuts Apple when it comes to price. But I would argue, Carol, less important than price is ecosystem, whether you're part of the Android ecosystem or whether you're part of the iOS
You're not buying one of these?
ecosystem. I'm not, and I'm part of the Apple ecosystem. I'm the blue bubble when you text, not the green bubble like Ari, one of our producers, who, whenever I text him, I have no idea if he's read the message or not,
What is
or if he's
that?
gotten it.
My husband and I were just talking about this. He's like, does anybody use an Android phone? Like,
Yes, they do. A lot of people use Android phones.
And I'm like, yes, John, and we ostracized
Emily
them very
Chang said the
quickly.
same thing to me years ago.
No, but I remember so much when Apple phones first came out, and it was just like the cool kids. We'd be in a conference room, and they'd be like, they'd put their Apple phone on the table, like, I've got an Apple phone and you don't. And I had some like really lame
Well,
thing
here's-
that folded or whatever.
Here are a couple things I'll say. Internationally, it's still many more people are on the Android platform than
That's
they are.
true.
In the United States, for years, still more people had
numbers don't
Android.
lie.
But now we're seeing more with Apple, at least according to the recent data that I saw. But it's the power of the ecosystem.
Yeah, I agree. I know in our household, and I know, forgive me, audience, you've heard this before, but my daughter would be like, yeah, at one point she was looking at either a Samsung or something, I don't know. And nothing wrong with it, but we're like, honey, this is an Apple household, and you're going to be part of it, as long as we are paying for it.
Yeah, if you're paying for
and
it,
you're
that's
under our
something.
roof.
That's really funny. But you can have services like WhatsApp or Facebook Messenger that allow for you to do these sort of video calls without using Apple service.
Okay.
Yeah.
Okay. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We are just getting earnings from Levi Strauss. It is reporting quarterly revenue that fell short of expectations. The denim maker also reducing its outlook for the full year. Stocks lower today with the Dow, the S&P, and NASDAQ all declining, all in the red today. The S&P down 38, drop there of 1% ahead of the jobs report tomorrow morning. The Dow down 346, down 1.1%. NASDAQ down 75, a drop there of 0.7. 10-year yield 3.82%. Spot gold down 0.2%, $17.13 the ounce. Crude up today by 1.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, at the top of the hour, our next guest is going live streaming from the company website with guests that will include designers, stylists, and more. We're talking about content creation to come, and we want to get into it with Ken Notori.
He's president of the Notori Group, joins us via Zoom from New York City. Ken, know you are swamped today, so we do really appreciate you taking the time. Before we get to tonight's event, I just want to get an update on the business, what you're seeing when it comes to supply chain and the macroeconomic environment right now. What can you tell us?
It's been easier in the past. Certainly the last couple of months there have been a number of headwinds, whether that be inflation, whether that be consumer spending getting hit based on the stock market being problematic and customers frankly just having spent a lot over the past year. So us as a company, considering where we were in 2020 when the world felt like it was falling apart, we certainly feel fortunate in terms of where we are, but certainly the last couple of months has presented, a good number of challenges.
That's what I wanted to ask you, Ken. Like, how are you? Like, what life was like pre-pandemic, and then, as you said, the pandemic was just so tricky for anybody in your space, and then kind of where we are today. Are you back where you were, pre-pandemic?
Yes, we are. So, we started our direct business early, but we headed into the pandemic, more than 80% wholesale. We planned for good growth for our website every year and planned for wholesale to kind of be flat. And we felt like we were ahead of the curve. Then obviously COVID was very problematic for our wholesale business, but it really led to tremendous growth for online. So, all in all, considering where things were in 2020, we do feel, we feel very fortunate. But as I mentioned, certainly there was such a high in 2021 that, companies like us, we felt like, wow, we made it. Consumers are spending. Everything's great. But then, reality has certainly started to hit a little bit over the last couple of months.
It's interesting to hear your what you see as consumer strengths and weaknesses right now. What about when it comes to actually operating and running your business? Talent acquisition, when it comes to finding and retaining employees, having to raise wages. Yeah. What has that been like?
No, that's certainly been an issue. We've been very focused on, employee retention, even before COVID. And I honestly feel like, our efforts there really helped us get through those very difficult years. And certainly, we've been blessed, we've had, great employee retention even throughout the Great Resignation. So, we feel very, very invested in our team, and that has helped. But certainly, we've seen wage pressures go up, inflation really sort of crimp margins across the board.
Hey, just trying to get inside your head, we were just talking about our Reed Pickard, who follows the Fed and the economy, and Ken, this concept of labor hoarding. In other words, a company would rather hold on to a worker because it's been so hard to get workers in this tight labor market. So they would rather hold on to a worker rather than let them go, even if maybe they're starting to see see some weakness out there. Do you buy into that? Do you do that?
I do buy into that, but once again, we've been blessed in terms of, really having great employee retention throughout all of this. To the degree we have added jobs, it has been more difficult than ever. I'd say that was especially an issue kind of the first quarter of this year when hiring was just impossible. One benefit of the economy getting softer has been a little bit easier over the last couple of months as we have continued to, to add to the team. But certainly, I think, issues in terms of, more in terms of employee retention. And really, we feel like this environment is here to stay. And that's really, a big focus for us going forward.
Can you give us any sort of numbers, how much it's costing you or what percentage you've had to raise wages or just the challenges that you're seeing and how it's affected the bottom line?
It's hard to quantify, but, in terms of, our ability to fill jobs back before COVID compared to what it was, towards the end of last year and towards the beginning of this year. I mean, we've had job searches that have lasted, months and months, and we're fortunately just about full now, but it's a major issue. And so, we certainly, in terms of the cost of training, costs of these searches, it's something that's sort of more cognizant and top of mind than it's been in the past.
All right, so top of mind, no doubt about it, has to be what you're doing in less than 40 minutes time. So tell us about what you guys are doing in terms of live streaming.
Yeah, absolutely. We're very excited. As I mentioned, our website, has been a tremendous source of strength, both before COVID and certainly through it. And we're actually launching live streaming from Notori.com. We're doing our first one at 5 p.m. today. Live streaming is really the way people shop in many parts of the world, most notably China and throughout Asia. And we're excited to launch it here. So at 5 p.m., you can come to Notori.com. It's going to be a great way for people to see the collection, to shop directly and really interact within our live stream platform. And I think, more importantly than ever, fashion's about making stuff, but really more than ever these days, customers don't just want stuff. They really want to know, who are the people behind this? What does this company represent? So especially as an independent business, as a family business, the ability for us through live streaming to really talk to our customer, for our customer to have that direct interaction and to feel that closer connection to, not just owners, but to employees as well. We think it's really going to be, a big change in terms of the evolution of Notori.com.
Well, speaking of the evolution, I'm wondering how you're thinking about different ways to showcase your products and how you're thinking about the metaverse and Web3, and if there's anything there for you.
Yeah, that has certainly been top of mind as well. We have something I can't share fully, but we have Metaverse has been a big focus of ours, and we have a partnership, and maybe I'll come back next month when we're able to announce it.
Great.
But suffice it to say, you guys know you've been great to have me on when we've had new collections. We're going to have a new collection coming out that's going to be available, and it's really going to help sort of push us into 3.0.
When you
Interesting.
Yeah, I know.
There's some there for the Notori company, which is interesting.
And it's interesting because as we try to figure out things like the metaverse, where that goes, real applications. Hey, just about 20 seconds left. Your mom going to be part of this?
Of today, yes. So she's actually on the live stream. I'm, as you guys know, I used
She
to work at
founded the
Bloomberg.
company, right?
She did. So she's going to be the guest, and she's going to be walking everybody through it. So, all of her big fans out there, tune in at 5. It's going to be live on Notori.com on a pop-up and live on Instagram and on Facebook as well.
It's how the world is evolving.
Did you say that Ken was a reporter here?
Well,
at Bloomberg
Ken was
News?
just talking. He was one of
Okay.
our Bloomberg colleagues going back a few years.
1998 to 2003.
Yeah, so a long time ago. I do remember him well. Ken Notori, president of the Notori Company, joining us via Zoom from New York City. Their live stream coming up in about 35 minutes. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, coming up, folks, not like your plate isn't full enough with things to worry about. We've got one more to add to it.
Are you being played?
It sounds like we all are.
Yeah, I think even if we don't even know it. That's the title of our next book, You've Been Played. Well, our next guest book, I should say. Carol and I not writing a book anytime soon.
No.
I'm not, are you?
What?
Writing a book anytime soon?
I don't
You got some book ideas.
I have a
I like
ton.
your book ideas. We're going to be speaking with Adrian Hahn, founder and CEO of Six to Start, also the author of a new book. We're going to have him come up in just a minute. First up, though, let's get over to Charlie Pellet, because we've got lots of earnings, Charlie.
Indeed, and I tell you, it's earnings season kicks off next week with a lot of the big banks, but right now we've got AMD, Advanced Micro Devices, down now by about 2.5% after ours. Preliminary third quarter results fell short of analyst projections, renewing concerns about a sputtering market for PC chips. Also after ours, we heard from Levi Strauss, the denim maker. It has reduced its outlook for the full year, citing economic uncertainty along with supply chain disruptions and a stronger dollar. After ours, we've got Levi Strauss down now by just about 6%. A little encouragement today for the U.S. stock market ahead of the jobs report. Major benchmarks finishing solidly lower today. The Dow, the S&P, and NASDAQ all in the red. S&P down 38, drop now of 1%. The Dow down 346, lower today by 1.1%. NASDAQ down 75, a drop there of 0.7%. Well, as for investor sentiment, Jessica Beamer is portfolio manager at Easterly Investment Partners, and she was our guest right here on Bloomberg Business Week.
I think we all have to understand that we're only going to get early hints of the Fed's full impact. A lot of the efforts that they've put out there, obviously huge increases in the interest rate, but that takes time to work its way through the economy and certainly on the jobs numbers that we're going to see.
Sources tell Bloomberg talks between Elon Musk and Twitter to reach a resolution of the $44 billion takeover are stuck in part over Musk's statement that his offer is now contingent on receiving $13 billion in debt financing. Twitter today down by 3.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So we've got pandemics, climate change, recession, geopolitical tensions, nuclear war, gamification.
Yeah, I mean, are we being played and we don't even know it?
Sounds like we are.
Yeah, we got Adrian Hahn joining us, founder and CEO of Six to Start, the author of You've Been Played, How Corporations, Governments, and Schools Use Games to Control Us All. Adrian this afternoon, or evening, I should say, for him, is joining us via Zoom from the UK. Adrian, I want to get into your background and, you know, what you've been doing when it comes to research and what you've been looking at in just a minute. But first, I just want to understand what it means for us to get played, because we don't even know what's happening.
Well, you know, gamification has become a huge part of the economy and of lifestyle apps and of workplaces. And a lot of times when it's there, we're aware of it. And other times, it's not really something that we have any choice but to put up with. You know, if you drive for Uber or, you know, work in the gig economy, then a lot of what you do is going to be managed by gamification.
So tell us about how your own personal experiences. You've created games, co-creator of Zombies Run. You've studied neuroscience at Cambridge and Oxford. But tell us about creating games specifically, how this has kind of maybe given you a different view on this environment. Or did you always feel this way about gaming?
No, I didn't always feel that way. I mean, you know, like everyone, a lot of people who grew up, you know, in the 80s and 90s, I just thought video games were great. You know, they're just fun and didn't see any harm. It was just, you know, a job that I really wanted to do eventually. Although I, you know, started as a neuroscientist, then I kind of secretly actually wanted to make games. And for the first few years when I was in the industry, I made a lot of, you know, educational and serious games. So, you know, games that were also trying to be fun, but also trying to help teach a lesson or do something a bit different. But, you know, I started making gamification back in about 2011, 2012 with Zombies Run, which is a game, a smartphone game that tries to make running more interesting and more exciting because when I started trying to run, I just found it really boring and painful and tedious. I think like a lot of people. So I thought surely there's got to be a way to make this a little bit more bearable. And my hope was a lot of gamification that we would see would be like that, where we're just trying to make something that we all want to do, whether that's learn a new language or learn a musical instrument or get fit, a little bit more fun. But actually, these days, you're more likely to encounter gamification in less sort of optional ways.
That's what I want to talk about. Because, what do you say? What were you saying?
Well, meaning
Joe?
what? Like, meaning what? Because it sounds like you're saying we're getting hit with gamification. We probably don't even realize it, how we're being managed and played.
So, for example, pretty much everyone who drives for Uber, which is billions of people around the world, will have the option to take quests to get a bonus every week or every couple of weeks. And so that sounds good. Who doesn't want a bonus, right? And a quest usually involves picking from a number of different options. So maybe you might say, I think I'm going to go and drive 50 trips in the next week and I'll get a $50 bonus. But, a lot of the people I've talked to, the drivers I've talked to, and a lot of the people who've been interviewed say they really don't like this because they end up feeling like they are pushing themselves more than they really wanted to. And also that they don't really have a lot of control over what bonuses get offered to them and also whether they can even make the bonus, because obviously it's not them who is, who's really has control of what jobs they get. It's what happens be given to them from Uber themselves.
Right.
And that's the case in a lot of gig economy jobs like Deliveroo and DoorDash and apps around the world.
What about on the consumer side, Adrian? Are there any sort of non-sinister uses when it comes to gamification? Is there anything out there that is... Yeah, well, go ahead.
Yeah, I mean, absolutely. I think within fitness, it tends to be a little bit better. So Nintendo's Ring Fit Adventure has been incredibly popular. There's also Wii Fit, which you might remember from 10, 15 years ago.
I can't believe it's been that long.
I know, super successful. Duolingo obviously uses gamification.
This is the language learning app, right?
Yeah. And there are musical instruments, educational games like Rock Band that try and make learning the real guitar, more interesting. So there's definitely lots of examples of gamification that people like and that benefit people. It's just that there is much more of a gray area, shading into kind of like a darker area in terms of what gamification is being used for. So to give an example of a gray area, it might be something like the Apple Watch, where gamification in the form of goals and leaderboards and so on is turned on by default.
It's obsessed. I'll tell you something about how my husband sleeps. When we come back.
This is going to have to be a deep tease.
Yeah, this is a deep tease. We're going to come back to Adrian Hahn. He's got a book out, You've Been Played. We'll get to that. We'll resume our conversation in just a moment.
Let's get to world and national news. For that, we go to Nancy Lyons in D.C. Hey, Nance.
Thanks, Tim. President Biden is pardoning thousands of Americans convicted of simple possession of marijuana under federal law. He outlined his actions on Twitter.
There are thousands of people who are convicted for marijuana possession who may be denied employment, housing, or educational opportunities as a result of that conviction. My pardon will remove this burden on them.
Biden is also encouraging governors to follow his lead and pardon those convicted on state possession charges. People who question the legitimacy of the 2020 election now make up a majority of Republican nominees on the midterm ballot. Bloomberg's Nathan Hager reports.
299 nominees in all have either denied or questioned President Biden's victory. That's according to a Washington Post analysis of House and Senate races across the country, as well as key statewide elections. Election doubters are running in every part of the country and nearly every state. 4 states have nominated election deniers in every race on the ballot. Of the 299, 174 are running polling for safe Republican seats. Another 51 are expected to be in tightly contested races. In Washington, I'm Nathan Hager, Bloomberg Radio.
A Wisconsin judge is prohibiting voters from canceling their original absentee ballot and casting a new one. It's a win for a conservative group that said the practice known as ballot spoiling is illegal. Ballot spoiling became an issue in Wisconsin after several candidates dropped out, but their names were still on the ballot. Elections officials told voters who had cast an absentee ballot for one of them they could spoil it and vote for someone else. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. Carol Masser, along with Tim Stenovic, live here on Bloomberg Radio and Bloomberg Business Week. We're doing a little bit of an audible for our producer, Ari Agamo. Ari, I always do this to you, Ariel. I know.
Oh my God, Ari just put his hands
Ari
up.
Agami.
I mean, it's cool because Ari's only worked here for a couple months,
know,
so you
I'm
guys
really
haven't worked together for that
sorry.
long.
I
And
don't know
I'm
why
clearly
that
being
happens.
sarcastic here because you guys have known each other for
You know,
years.
I
It's
should
okay.
just-
It
I should
happens.
just give up speaking for
You
a
know
little
what? I've mispronounced my own name, so
I know.
that stuff happens.
So we're going to do Ariel Agami. We're going to do some earnings because AMD just came out with a preliminary third quarter revenue. And I think about our market guest today who said it's going to be very interesting to see what companies say about the third quarter and the fourth quarter outlook. Well, for AMD, they are bringing down their third quarter revenue and they're looking for about $5.6 billion. The estimate out there, more than $1 billion above that. The $6.71 billion is the estimate that's out there.
Yeah, when we talk about a market-driving story tomorrow, Carol, this is certainly going to be one of those I anticipate because AMD is
Probably a
coming out and
decliner for
blaming.
you.
Yeah, that's true. Blaming the PC market for hurting sales, citing weaker demand and a buildup of inventory in the supply chain. The third quarter will also include $160 million in write-downs related to inventory pricing and other issues. That's according to the company. We did see, Carol, during the pandemic, especially in the early part of the pandemic, a lot of people pulling forward those PC purchases because they were working from home. They needed that equipment at home. Companies needed to buy that at home. But as people have gone back to the office, we've certainly seen softening sales.
Yeah, don't need it anymore. Anyway, AMD down about 3.8%, so we'll be watching the stocks certainly too into the Friday trade. They get Levi Strauss under some pressure in the after hours, cutting their year-adjusted EPS forecast. They're looking for fiscal year net revenue up 6.7% to 7%. They had seen 11 to 13% upside, and EPS for the fiscal year, adjusted EPS, $1.44 to $1.49. They had seen $1.52, $1.56, and that stock, quick check here in the after hours, down about 4% right now.
Contour Brands also moving lower aftermarket in sympathy with Levi. Tomorrow, check out American Eagle Outfitters, Abercrombie & Fitch, and Gap as a result of these Levi's earnings.
All right, some earnings to carry us into the Friday trade. Right now, this is Bloomberg.